I think we're slightly ahead of time, so we'll crack on. James Webb, Managing Director of Rothschild Co, is going to come and talk, probably from a city perspective, about what's going on in future resources. Is James here? Hopefully he's prepping. But actually, there's probably just is he? He's here. James, I've just given you a wonderful introduction.
Hi, sorry. I just found out that the deal was signing next week is just leaked to past markets.
Okay. James, I'm going to give you, when you're about 20 minutes in, I'll give you 2 minutes.
Oh, I won't go for 20 minutes. If everyone starts falling asleep, we'll be fine. I'll shut up. Yeah, absolutely, yeah.
Right,
yeah.
thank you.
No problems at all. Hello, good afternoon, everyone. I've got the 12:30, so everyone's going for lunch soon, spot, haven't I? So look, I pulled a few slides together. All investment bankers need slides to talk through, but maybe just to start as an introduction, I'm James Webb, a managing director at Rothschild's in London. I lead our metals and mining coverage efforts here in the UK, Europe, Africa. Used to do Russia CIS as well, but obviously spending less time there now. For those of you who don't know who Rothschild's is, probably because you've been living in a cave for the last 200 years, we are the biggest advisory house in the world. We have more bankers than anyone else, and we are just exclusively advice. So we don't actually have a balance sheet, we don't lend money, but people come to us because they want to know how to finance projects, how to buy assets, how to sell companies, all this kind of stuff. And that's exactly our bread and butter. And I'll come on and talk a bit more about that in a moment. I mean, it goes without saying we do a huge amount of this. This is, we're number one in Europe, in the UK by a country mile. Globally, we're normally number 2 or number 3 around with Goldman's and JP Morgan, which again, we're a very different business model to them. But we just have a huge amount of experience, a huge amount of deal flow. So we actually know what we're talking about when it comes to raising capital. I mean, just a few tombstones. I won't bore you for long, I promise. Look, we do a lot in the metals and mining space. We really do know that industry incredibly well. Lots of credentials with very big names, but we also do a lot of smaller stuff as well in the junior mining space. And takes a good example might be something like Kenmare Resources, who have a big titanium ilmenite project in Mozambique. We actually got involved with them at the beginning, got the project financed, and have advised them for 20 or so years since then. Interestingly, over the last 2 years, I'd say, we have been doing a lot of work in the battery metal space, in particular in lithium, where up until February, I was working on 6 different projects for a very large Russian organization who we've since resigned from. They were running around the world trying to buy lithium projects because they've identified that is where strategically they need to be and need to get ahead of the Chinese. And we'll come on to talk about that in a moment because that's really the main theme of all this. But also a lot in nickel. I've worked in projects in Madagascar. I'm actually financing a nickel laterite in Brazil at the moment as well. And we also do a huge amount particularly in copper. Obviously, copper is always a very popular commodity for all types of investors. Look, I'm probably not going to say much on this slide other than we're great. That's all. So a quick reminder on why we're all here. There was a presentation prepared by the IEA last year, which I'm sure most of you've seen. And I've shamelessly ripped off a lot of the slides here, but I thought they were really great because they really trigger your thinking about what the potential opportunity is here and what's the requirements in terms of the amount of copper, lithium, nickel as we transition away from coal, natural gas to some of the clean energy forms of clean energy. And there were some great slides, which I'm not going to go through all of them, but just to highlight a few on these slides here. And I'm sure we'll be able to send these slides around so everyone can see them after today's conference. I think an important point on this I wanted to make here was that there's lots of different end uses. There's lots of people talk all the time about EV battery storage because that's one of the most commonly discussed. But actually, it affects so many different end uses, and there's so much potential here, which is why people like me get very excited. before we get very depressed with another slide I'll show you in a short while. I mean, to pick up on the EV and battery storage story, we've got, for example, in terms of the battery cell, 20% of a cost of a battery cell is in materials, of which 10% is roughly in the cathode, which is obviously where you need your lithium, your nickel, your manganese, your cobalt. Huge potential. This is all me selling, sort of the story to people that have already been sold the story, I know. And then again, a couple more charts here, which just underlines the importance of copper, lithium, nickel in particular, or in the heavy-duty vehicle space of the LFP commodities. Moving on from that and just sort of making a point about the transition, because there's been a lot of announcements recently, and I think the EU came out with one earlier in the week about sort of banning the production of internal combustion engine cars from 2035 onwards. And this just, I'm having conversations now with GM, Ford, Volkswagen, Tesla about investing in mining, which 5 years ago, 3 years ago, just would never have happened, would never have occurred. And this is the reason why, is because they are existentially stuffed if they do not get security of supply. And that is why, on one project I'm working on, one of the major US auto groups have just thrown out a couple $100 million and said, here, we want to invest in your project. Tell us what you need from us other than money. And that's the kind of the state of their mind at the moment. Now, different auto groups are approaching this differently, but in particular the US and the Europeans are behind the US in many ways, but catching up fast. There's a lot of new interest, and again, there's a slide later where I'll talk about this in a bit more depth. Two other points I want to quickly make is one is an uncertainty, and the other one is a certainty. The uncertainty is the huge variability in growth. So we all know it's going to grow, but we have no idea how quickly it will grow. And this is again taken from the IEA report, and you can see, lithium may grow at either, by 13 times or 42 times. Now, whether it's 12 or 41, no one actually knows, but kind of huge variability, huge uncertainty, and that obviously impacts the supply side, because how much more supply do we actually need? How does recycling impact supply as well? So that's a huge uncertainty facing the industry. But one significant certainty right now is that China dominates. And that is the sort of the conundrum that the West, the Japanese, the Koreans, and the Russians, up until a few months ago, really were most concerned about. Is how do you go from a chart where you mine in the countries in the left, but then end up with all the metal in China on the right? And that, I know, is what a lot of the idea behind creating a sort of a northeast hub is all about. There's a lot of text on this page and lots of challenges. I'm here to offer solutions, not present challenges, so I'll let you read that in your spare time. Now, bringing this to my area of expertise, which is markets and raising money. So I thought I'd just show you a few slides in terms of what's going on in the commodity markets. So on the left, we've got commodity prices. Hopefully most of you read the paper and you saw what happened with the spike in the nickel price recently. That was really an issue on the LME more than anything. But most interesting of all is lithium, which is up 155%. So that's more than doubled, almost trebled, in the course of the last 4 years. And a lot of that is just driven by, frankly, scaremongering, lack of supply, the knowledge that it takes a good number of years to bring projects on stream, particularly when you're looking at salars in Latin America, where you have to wait a number of years before the salt ponds evaporate, etc. And so there's a lot of fear really in those prices. And then on the right, it's sort of similar story, albeit these are the market caps of the companies in those operating in those commodities. Similar story, lithium and to an extent nickel, copper are the standout performers. They're the ones that everyone is really very excited about. So I wanted to show a slide on what we call buy versus build, which is, do you invest in a new project, greenfield project or brownfield, or do you go out and buy assets? Now, my strong preference is the latter because I'm first and foremost an M&A banker, but I also help finance projects over time, albeit they are generally really extremely hard work to get financed. And what we're seeing is nicely, more interest in financing projects globally, mostly in copper. The laggard here, I would say, is nickel, because actually we do need a lot of nickel, but the Chinese are developing the most nickel projects in Morowali Island in Indonesia, a lot of laterites there, building out a lot of HPAL capacity. I think you'll find over time, if you were to roll this on, say in 5 years' time, the red of the lithium will start to grow. And I think in any case, because this is in $1 billion, all the numbers will grow, because what we're seeing is capital cost escalation in the industry is now running at somewhere between 50% to 100% on what they were a year ago. Now, the next slide is the depressing slide for me, which is M&A activity in the industry, which is why the reason why Stuart, our host here, has decided to get out of banking, is you see over time just a lot less activity in M&A. And that's really just driven by the fact that a lot less capital has been available in the industry. What we're seeing, and I was surprised when we got the data for the chart, and 2021 was so low, albeit I think that mainly because it was the sort of the follow-on of the 2020 COVID year. What we're seeing now is that bouncing back, and so arguably we've hit the inflection point, and that is starting to come back. So that combined with that actually makes me still want to go to work in the morning. So just on here, actually, you'll see that we don't actually have a bar for lithium, and that's because no one's really been executing any M&A in lithium for as long as I've been in covering the industry, which is over 14 years, and that's changed dramatically over the last 18 months. And this is just a selection of some of the activity in lithium, which is, absolutely where all the money is flowing. And just to highlight the point I was making before about the preeminence of the Chinese in that, in getting their foot on the ground in terms of securing supply of lithium, you've got Huayu, Tsingshan, Zijin, Ganfeng, Jiangxi. There's also CATL, Yahoo, who've been doing stuff as well. Huge amount of interest, and I'm going to call out one deal here, which is the Prospect Resources. They had an asset called the Arcadia project in Zimbabwe. It was an interesting project, not a great one. It was quite well developed, and I advised an underbidder, one of the Russians, and we were bidding on it, and they paid $378 million for a business which had a market cap of, well, about 150 at the time we got involved. It ended up about 200. So they basically paid double the market cap for that asset just to get that asset. That is what we're competing with, or the West is competing with, in terms of the clamour for resource, the clamour for these assets. Very deep pockets of capital, and they recognise that they got it completely wrong. The Chinese got it completely wrong with iron ore, and they're entirely dependent on the Brazilians and the Australians for iron ore for their steel industry. It's not going to happen again. Their thesis is you have the lithium, you process the lithium in China, you produce the batteries in China, you manufacture the EVs in China, and you export EVs to the world. And that's the way that their model is going, and you can see that very clearly. And that's why, from a Western perspective, attitudes are now hardening to actually we need to onshore some of this. Again, just reiterating the whole valuation and performance of the lithium producers in particular. I mean, anyone that's ever looked at a valuation of a mining company knows that they are never valued at 30 times EBITDA. That's crazy valuations. That's come off a lot now, but that's really because the actual earnings forecasts have caught up with reality, and so the denominator has gone up, and actually the EVs are still very high, and so those multiples are still very high. I mean, 15 times is, Rio Tinto I think trades on 5 times, and that's a massive established mining group. So I'm going to finish with just a few words on funding and where the money comes from and where the money could come from. I always show this to my clients just to sort of make the point that there are lots and lots of different potential sources of finance. It's not just equity from shareholders or debt from the bank. There are so many different sources. You can equity with a JV or a partnering, you can IPO, you can look to bring in a royalty or a stream off your revenue streams, you can bring project finance, bank finance, bonds. Not all options are available to all projects, but there's lots and lots of different sources to keep in mind and to have in your sort of your armory when you're talking to investors. A lot of words on the slide here. I'm not going to go through them all, but have a read through in sort of in your spare time. But pros and cons of each. Again, you need to think these through. What works best for your project? What works best for your shareholders over time? On this slide, I've tried to just summarize all the potential sources of interest. Now, this is really very selective, so the names are just there as illustrations. But what is really interesting is, if I'd done this slide probably 5 years ago, half of these names probably wouldn't have been there. Mining groups, fine. Asian investors, absolutely. Financial investors, absolutely. Auto OEMs, totally out of left field, are now showing a lot of interest. You've seen, I'm sure, lots of deals with Stellantis recently. As I say, Ford, GM, very interested. Tesla live off their brand, frankly. They don't actually put any money to play. And then you've also got the mid and downstream groups, people like Northvolt, who are now realizing that actually if they're going to build a gigafactory, they need some commodities, and so they have to invest upstream. But you've also got Total Energies, BASF to an extent. But then you're also seeing traditional institutional investors, the long-only funds, lots of energy transition funds. TechMet are a client of mine, so this is a really interesting fund backed by US Development Finance Corporation money, where Brian Mennell, the chairman's, basically sold the story to the US that they need to be backing him to invest in projects and fund projects, because otherwise you're not going to have anything left, given the Chinese are buying everything. And then special situations, and then you've also got all the traditional sources of debt finance as well. So there really are lots and lots of options available, but it's complex and it's a bit of a minefield to navigate, which comes to my key takeaways, of which I've broken the rule of 3. So apologies for that, but look, 4 things. One is there's war, there's COVID, big impact on trade and supply chains, a lot of inflation, increasing cost of capital, a lot of talk of recession. It's just chaos. It's chaos in the markets. I had breakfast yesterday with Oli Oliveira, who sits on the board of Vale, was on the board of Antofagasta. He said it's the most chaotic he's ever seen it. This is a guy who's been around for donkey's years. So it's chaos out there, but markets are reflecting that. And the second point is, the energy transition started. It's not going away. It's going to be with us now. And there's so much momentum behind it that we can all ride on its coattails. Which really for the industry is a great opportunity, right? I mean, that's why we're all here. I mean, this didn't exist 2 years ago. This conference probably didn't even exist last year, did it, Stuart? And that's why, the opportunity is huge for the industry, and funding's there. You just need to know who to ask, how to structure it, what you're looking for, have clear objectives. And the shameless plug for me and Rothschilds is that's what we do day in, day out. And so, you should come talk to us. And that's it. Quarter of an hour.
Thank you very much. Any questions for James?
How is that Chinese acquisition looking in Zimbabwe with the increase in price?
Well, I think I saw that they're getting in trouble because they agreed with the government that they were going to have first lithium within, I think it was 3 or 4 years, and now they're well behind schedule. So I don't think it's looking quite so smart. But they own the project, right? And no one else does. That's ultimately their objective. At least from my vantage point, that's all they care about, is just putting their foot on the resource.
Okay. Any other questions for James?
Right. Depends how early stage. We're a commercial organisation, not a charity, so we do need to make some fees. But look, we absolutely will roll our sleeves up. If we think the opportunity is a good one, if we think it's viable, and we think there's money, funding available for the project, then yeah, absolutely. We advise Rio Tinto and Anglo-American groups like that, but I'm advising a very, very small Norwegian seabed minerals company at the moment that's trying to acquire a license because it's interesting work, and that's what I get interested. I am interested in those kind of small projects just as much as doing the big stuff.
James, given the issue around security of supply in China, moving on, not only raw material but also processing capacity to do those things, do you see a role for state intervention, particularly in developed market economies, to fund the supply of materials and processing materials?
Yes, yeah, and as I mentioned with TechNet, there's a very good example where the US Development Finance Corporation are putting money directly to play to support the development of critical minerals. I mean, the issue is that critical minerals list is about 100 minerals long, so it's very sort of extensive. But yeah, absolutely. I really do think that state backing, state funding is required to get things off the ground. For private capital to really want to put money into and invest in projects which perhaps aren't economically viable without that kind of level of support, because ultimately private capital only really care about returns, and the cost of capital is going up. So I think if there's to be a transformation, it needs to be led by the state as much as anyone.
And just an extension to that, we talked today about resource nationalism, we talked, we can see how it's playing out. That's state intention to support it. The flip side of that, China arguably won the long game in hoovering up offtake agreements and positions in the intervention. And with resource nationalism at play, what about some sense of protectionism to act in a protectionary fashion to existing qualities, and does that make it harder for European operators and those seeking to M&A in overseas jurisdictions?
Yeah, look, I think to use a good example, if you're a mining group and you develop a project, and you're deemed to be, say, a Western mining group, and you want to sell that project, and the only buyer is a Chinese buyer, and the government steps in and says, no, you can't sell it to them because they're Chinese, then clearly that's not a satisfactory state of play for the company or us as shareholders in that company for our pension funds. Protectionism will always come with a price, right? And it's getting the right balance in my mind. And at the moment, there is no balance because we're so far behind. I mean, the scary statistic is that Europe doesn't produce a single ton of lithium today, at present. I'm talking to a couple of projects in Spain that are trying to get off the ground, and they just can't get the permitting. It's too difficult to get the permitting and licensing. So we have all these grand plans, and we want to be able to nurture this industry, but actually getting them off the ground is almost too difficult. There's nothing really to protect at the moment, right?